So I've got another great article to talk about from wolfstreet.com, Mr. Wolf Richter. It's titled, "So Who's Pumping Up This New Normal Housing Market?" Isn't it amazing how all of a sudden, again, housing market issues back in the spotlight. I'm doing videos practically daily now on that. It is absolutely an issue, which is why I'm doing the videos. And also the stock market is way over bubble territory. Massively, as you will just have heard from my previous video right before this one. So he says, America becomes landlord land. A housing recovery that is highly dependent on real estate investors is a bit of a double-edged sword, explained Darren Blomquist, Senior VP at Atom Data Solutions. Rapidly rising home values have been good for homeowner equity, but also have caused an unaffordability crunch for the first-time home buyers the housing market typically relies on for sustained long-term growth. So the housing market is starkly different than a decade ago, said Alex Villacorta, VP of Research and Analytics at Clear Capital. As such, it's imperative for all market participants to understand the nuances of the new normal real estate market. That was his quote. They were both commenting on a joint white paper by Atom and Clear Capital titled Landlord Land that analyzes who is behind the housing or U.S. housing boom that drove home prices to new all-time highs and in many markets far beyond the prior crazy bubble highs, even as home ownership has plunged and remains near its 50-year low. First-time buyers are the crux to a healthy housing market, but they aren't buying with enough enthusiasm. In 2012, buyers with FHA-insured mortgages, who are typically first-time home buyers with a low down payment, according to the report, accounted for 25% of all home purchases. So 2012. 2013, their share dropped from 25% of them all to 20%. And in 2014 to 18%. You following me? Then hope began rising, briefly, he says. However, in January 2015, FHA lowered its insurance premium 50 basis points, about 0.5%, right? And there was a modest resurgence in FHA buyers, a trend perhaps indicative of loosening credit requirements or of a desire to re-enter the housing market for those displaced during the crash. No, you just made it easier again for someone to get a house. That's the answer. That's it. The first thing he said. Which had what kind of consequences and what kind of devastation afterwards? They couldn't afford that down payment because they don't have the money. If they don't have the money to afford a down payment, that means they can't save. If they can't save, then they can't freaking afford a mortgage. God forbid anything goes wrong with their car or the house or anything in their lives, and they got to spend an extra $1 here and there, or it's, as you know, it ain't gonna be $1. It should be hundreds of dollars, maybe 1,000 or more, depending on what needs to be repaired, whether it's the car or house or anything, just anything in their lives. Oh, major health issue. Oh, but I got health insurance. Yeah, but you also have a massive premium and deductible you got to meet. So again, unexpected expense, right? So FHA, I authorize you to make things a little easier again for homeowners because the data is looking horrible and we need it to go back up, and it did, and I guarantee it was just briefly, and it's probably right back down. I haven't read this article in full. Let's see where this goes next. So it says, however, in January 2015, FHA lowered its insurance premium 50 basis points, and there was a modest resurgence in FHA buyers, a trend perhaps indicative of loosening credit requirements, or a desire to re-enter the housing market for those displaced during the crash. Their share of home prices trickled up to 22.3%. He says, alas, the FHA resurgence was short-lived, and in 2016, it's back down 21.7%. With first-time home buyers dwindling or twiddling their thumbs, then who is buying? Who is driving this housing market? Institutional investors, defined as those that buy at least 10 properties a year. They include the largest buy-to-rent Wall Street landlords, some with over 40,000 single-family homes, who've picked up the low-hanging fruit of the distressed properties available at a discount between 2009 and 2013. As the report put it, that was during the foreclosure crisis when they bought these properties from the banks. So in quarter 3 2010, institutional investors bought 7% of all homes. In quarter 1 2013, 3 years later, their share reached 9.5%. As home prices soared, fewer foreclosures were taking place. By 2014, when home prices reached levels where the large-scale buy-to-rent scheme with its heavy expense structure wasn't working so well anymore, these large buyers began to pull back. In 2016, the share of institutional investors dropped to just 2% of all home sales. So it was 7% 2010, which looked great. 2013, quarter 1, baby. Let's go, 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 go. 9.5% to just 2% in 2016, just last year. That is a trend, and that is a horrible drop. And that trend is very telling. Real estate is going to be in big, big trouble. That's why I've been telling people, hold on, wait it out. If you're going to buy a house, there are going to be some fire sale deals coming to a planet in the United States, country near you soon. But as institutional investors stepped back, smaller investors jumped into the fray in large numbers. Oh, really? Willing to purchase in a wider variety of market landscapes and operate on thinner margins. No kidding. To approximate total investor purchases of homes, the report looks at the share of purchases where the home is afterwards occupied by non-owner residents. 2009, according to this metric, 28% of all home purchases were investor-owned properties. Folks, that is an enormous... That's more than a quarter of all home sales. 2009 were investor, rent. Let's buy up everything and rent to people. So as I was discussing with someone recently, so basically they went and cleaned house and kicked out all the people. You're being foreclosed on, and then we're going to take your house and then essentially, maybe not this exact house, but some house we own, rent it back to you for more than you were actually paying in your mortgage to begin with. This cannot end well for society in the United States. Okay, I'm just going to say that out loud. So in 2009, according to this metric, 28% of home purchases, all home purchases, were investor-owned properties. In 2010, it rose 2% more higher, 30%. 2011, 32%. Then, as big investors pulled out, it fell back to 30%. But by 2015, small investors arrived in large numbers. And by 2016, investor purchases jumped to 37%, an all-time high in the Atom Data series going back 21 years. That 33% is a third, right? 33 times 99. 37% is more than a third of all homes being gobbled up, whether big investors combined with smaller investors. The big investors had enough, but the small investors apparently were willing to jump in there and, again, take smaller margins, but we'll go ahead and do it. So it's the same thing. Everyone's being foreclosed on, you're now going to have to rent. But see, the people who are foreclosed on, again, stop paying their mortgage. Once they realize that we're behind, they're going to be foreclosing on us. People don't keep paying the bills. They stop. And they say, I'll just live here as long as I can, saving all the money I can, so that when we do have to move out, we'll have a nice nest egg to deal with crap. Only to find out, okay, we have to leave now. We're being kicked out. Well, that's okay. We got some good rent money saved up. Let's go rent a place for a lot more than likely, than what they were paying in the for the mortgage before. Now, you might find some people will know their house that was $400,000. It's not even worth, $300,000. They had a big nut to crack. They were paying a high mortgage rate, monthly rate. Now they can go rent somewhere else, maybe smaller. Even though it's higher rent normally than it should be, it's still less than what they were paying. But again, that's not exactly the majority of people. The majority of people didn't have a $400,000 house right now that's worth $300,000. Back in 08, 7, 8, 9, when that was happening, yes, that was definitely the case. A lot of people were owed way more than it was worth. But that was the first glut that got dealt with. Foreclosures and all that stuff. Then, we got the bank. Remember the banks? They had a bunch on standby. They weren't putting them on the market because they didn't want to flood the market. I got a sneaky suspicion that that's what they had in inventory is now coming back on the market because I showed you through Zillow.com. And you can do this yourself. Go to Zillow.com, type in your area, and just type in a 2-bath. Only criteria, 2 baths. Show me everything in the area. And then zoom into the map. You can use your little scroll wheel on your mouse to zoom in and zoom out. And you'll notice, like I showed you in my other video, you zoom out and there's a bunch of red dots. That's all the stuff that's for sale by owner from people who own the house. But then you zoom in into an area and all of a sudden there's more red ones, but then there's all of a sudden a giant, enormous amount of blue ones. And the blue ones are the foreclosure and auction houses. The ones that are being auctioned because they were foreclosed or they are foreclosed are currently being foreclosed. That's the blue color. I was blown away. I keep saying it because I've never, ever, ever seen that kind of blue color on the map. And I've been at Zillow at least, I'm not going to say once a year because I'm there more than once a year, but every single year. I always check out stuff. I like to look at this area, maybe Alabama. I kind of look at Tennessee sometimes, some of the country, thinking, if I move out to the country again, would I leave Florida? Would I, just a thought, not that I'm doing it, and just want to see what the areas show. And Alabama's pretty damn cheap. There's some beautiful, nice property, big property, nice house, really cheap. Alabama, even today, these days. So that's, I just poke around, but my goodness, is there some freaking foreclosures on the market. The chart shows the share of purchases in a given year. Note the declining share in the first-time homebuyers, which is the blue line. Let me pull this up. Which is the blue line. The declining share of institutional investors, which is the gray bars down here at the very bottom. And the surging share of smaller investors, which is the green line. So smaller investors are, we're going to jump up here. Whereas the institutional ones, I think we might have had enough. We're starting to go back down. But again, combined, it's an incredible amount of investors buying. I thought being an American citizen, number one goal, home ownership. When you are a home ownership, you can sit there and wave that American flag. I am living, it is official, check down the list. I am an official American dream liver. I have achieved the American dream. I am a home owner. Nope, not anymore. More than one third of the United States population are now going to become renters because more than 1/3 of these people are buying up all the housing. However, my question, how many people were renting before that aren't included in this? In other words, you have people who were already renting, then you had the foreclosures come up, whether it was big or small institutional investors coming in, picking them clean, and then renting them out. They're renting, that's 1/3 of all sales of houses being going to them, more than 1/3 of the sales they're buying. But then when you add in the people who are already renting in this country, what do the real numbers show? I don't even know if I want to look that up, to be honest with you. And they've got a pie chart. I'll pull that up too in case you want to see that. The pie chart shows the share of properties owned by investor size. Among investors in today's housing market, small landlords that own 1 or 2 properties own in aggregate the largest slice of the rental housing pie, 79%. Ooh. However, Wall Street landlords are concentrated in just a few urban areas. For example, Invitation Homes, the 2012 buy-to-rent creature of private equity firm Blackstone, which owns over 48,000 single-family homes and has nearly unlimited financial resources, including government guarantees on some of its debt. Boy, that's a fine, sweet deal, isn't it? Is concentrated in just about 12 urban areas where it has had an outsized impact. Whereas small investors own property across the entire country in urban and rural areas, in cheap markets, and ludicrously expensive markets. They own condos, detached houses, duplexes, and smaller multi-unit buildings. So when the industry tells us about low inventories and strong demand in the housing market, it's good to remember where a record 37% of that demand in 2016 came from. Investors, most of them small investors. And when the financial equation no longer works for them, they'll pull back, just like the institutional investors have already done, in what are now deemed the most expensive multifamily rental markets in the world. San Francisco and New York City, the commercial property bubble is already inflating. He says you can read this article, also from Wolf Street. Here are the top sell markets in an overpriced world as the apartment cycle draws closer and closer to the end. I will be linking his article in the description section of my video if you are more than curious to go check it out yourself and follow that other link. But for the purposes of this video, I don't need to follow that link and continue on. I've already said enough, okay? Again, I wish I could come out here and say, some data I've been looking at, it looks solid at first. But I just found something very interesting, and it's suggesting that, the real estate market is actually going to continue turning around and doing well. The prices are going to go higher. I cannot find, for the love of the freaking universe, I can't find it. It doesn't exist. It only exists if you talk to some kind of realtor association, and they'll tell you, oh yeah, and you bring up some hard facts to them. Well, yeah, but we don't know if it's a trend yet. It could be just a one-off. Those are the feel-good people. The real estate people, agencies, they are the feel-good people. The ones who will never, ever, ever, ever tell you, yeah, the market's not looking too good. They're always going to tell you, it's fine. It's everybody, the experts going to be fine. There's just one-off blip. It's no big deal. I'm selling such and such. But remember what happened last time, 2008-9? I remember talking to quite a few people. Some of them, I used to do real estate. The market absolutely plummeted after 2008-9. I had to quit. I had to go do something else. Another person was telling me, Joe, I think I might go and do this. Matter of fact, I think they emailed me. This was a few years ago. And I said, man, I don't know if I'd get into that industry, to be honest with you. Right now, I don't know. How does a realtor make money on, I'm going to pull it up. I'm going to have to pull this up again right now. Zillow. Let's do this. 33511 zip code. That's Brandon, Florida. More map. Those blue ones are foreclosure/auctions. How is a realtor making money on a foreclosure? They're not. The bank's foreclosing. They have nothing to do with you. Get lost, realtor. Unless they happen to sell it. But as I've hovered my mouse over a bunch of these, auction, foreclosure, auction. That's the deal. These are foreclosure auctions. So, looks like the family's home. But look at this. Is this normal? I didn't even think to look in other areas. Speaking of, what did I say? Not Georgia, Alabama. Is this normal? Let's kind of look in. There's still quite a few. This looks better, and of course we got Dothan. That's a major area. This looks a lot better over here in Alabama. I can tell you that much. How about Texas, the great state of Texas? San Antonio. Zoom in. You guys zoom in. You don't zoom in, they like to trick you. Not bad. This is not bad. This is what I would expect to see. But we're talking, at least for me, the state of Florida. Florida. If you want to know how a real estate market's doing, check out Florida. Matter of fact, speaking of outrageous, let's go to Miami. Not bad. I gotta say, not bad. Not as bad as, well, wait a minute. See what happens when you start to zoom in? Hold the phone. It's like Zillow's programmed. Don't show the auction/foreclosure ones unless they get closer. We want to make it look good. Look at some of the. There are massive homes for sale just in this little area. Like everything in this is a small area. And just look at how many people are selling. And my question is, are these the old institutional investors selling all of a sudden, or are these actual real homeowners? Because the red dot will still come up if it's owned by, in other words, if it's being sold and it's not foreclosed. So like if you were to sell your house, or if I owned one and I would sell mine, it'd come up here as a red dot. But that doesn't matter if I'm a person selling, or if I own a company that bought 50,000 properties and I'm selling, it's going to come up red. Because I'm looking at this, I got to be honest. And again, once you zoom in, there's the proof in the pudding. This is a lot of foreclosed property. These are some decently high numbers. 400, again, for Florida, 300s, 1.5 million over here, 636,000, I mean, are all these people, where are you going? Where are you people moving? How is there this is just this is like a block. This is like a square block over here, okay? There's that many houses for sale in a square block? Let's go up to the next block. Same thing. To me, and I have to say I am guessing here, but I don't think there's a chance in hell that citizens who own all these houses are all deciding we're selling and moving. All these people are moving. Oh, are you moving out of the state? Where are you going? There's no way. I personally, again, opinion, think a lot of what we're seeing here is some type of investment people, service, etc., getting out as fast as they possibly can because they know and have already seen the stats. The housing market crash 2.0 is coming. Guys, we got to get out now. There's no way this many real homes for sale are happening in one little block followed by another little block. Basically, block after block after block, just homes for sale. Look at this. You see this little water? See my mouse? A little water and stuff. Clearly, this is just a housing development, little community. Obviously, you can just tell by looking at this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. I mean, there's 20 in this little piece of a corner. 20, 40, 60, 80. I mean, there could be 200 something. And again, some of them are so close to each other, I got to zoom in more so they spread apart. 1.4 million, 1.28 million. I mean, and I'm just curious. I'm just going to pick this 1.28 just for fun. This is a red one, not a foreclosure. Spectacular luxury home in Doral Isles. Oh yeah, it's beautiful. Let's go to the price/tax history. Sold in 2015. Agents. Well, this is an agent. That doesn't tell us who bought the thing. And now it's listed for sale as of last year, which is when I started really seeing the data about real estate. Now, I saw it before that, but more data to assure me, yeah, you're right, real estate's going down the tubes. More data came in. Sold for $900,000. Let's sell it for $1.28 million a year later. Do you think a person bought a home and decided to sell it a year later? This was an investment property in some way, shape, or form. Okay? And you can look right here, down here, where it says monthly. Whoever owned this previously, 2010, tried to sell it for $1.4 million. 2010, that was like when the bottom was happening. Dropped the price, can't sell it, 1.2. Listing removed. We're out of our minds. We're smoking crack. Remove the listing. Let's rent it. Listed for rent, $5,800 a month. Later that month, listing removed. Let's try to sell it again, 1.3 mil. Nope, not happening. Several months later, $5,500 rent, right? So they went from $5,800 to $5,500. This is desperation. So whoever owned this house, and again, this could have very well easily have been a rental company or a company we're going to buy a house and flip it, couldn't flip it, let's rent it. Tried to rent it, we're asking absurd prices, no one's freaking buying this thing, let's try to sell it again. Finally sells, finally sells in 2015 for $900K. Remember, 1.4 million, 1.2 million, 1.3 million, 1.25 million. Not happening. Finally sells for 900. And then a stinking year later, someone else decides, I'm going to try to sell it again for 1.28 million. When the last several years, someone tried to do the same thing and failed. So what? One agency bought it and sold to another who's going to try the same crap that didn't work for the last 5 years? This doesn't make any kind of sense. If this was a person looking to buy a house to live in, this doesn't even kind of make sense. You couldn't make this make sense. So what I'm suggesting is that this is pure investment. People get in, out, and it's not working, it's failing, and now the whole freaking investment industry, those big ones, that 20-something% buying up all the crap, are now in reversal, sell mode, in my opinion. This history does not make any sense whatsoever. When I've looked at normal homes, someone's selling a house, they live there, I'm going to buy it, maybe they're the second owner, maybe they're the first owner, you can see a nice clear trail right here on Zillow that makes sense, sold in 2004 for this price, then they bought it in 2010 for that price, and now I want to buy it today. Yep, it all makes sense. You don't see this nonsense. So, I'm telling you this. Hold on, nope, I'm not done. Let's scroll back. Let's scroll down. Nice golf community. Check this baby out. Still quite a few homes for sale. Now, in this particular golf community, we don't see as many of the blues, which again is foreclosure. But again, are there really people who lived in here? Oh, wait, I just saw something that stands out. Check it out. Let's zoom in. What do you see here? 4 units and 3 units for sale. What does that mean? That means that someone came in to try to buy these and sell and rent them out, which might be what I'm suggesting is happening in all of these, and they found out there is an absolute glut of property now that all of us investors came in and thought we'd flip them, not even flip them, we'd rent them all out, and we don't have a lot of people renting them. Is it possible that all these things are empty? That if you click on them, which they don't say that, but maybe they're empty and no one's living there. And these are all empty houses that the investors bought to get some high dollar rent money, which is a great market for us to find out. Again, all together, you get 2 or 3 big giant companies that understand this, who bought up most of it, and then they all decide at the same time, because they're just as smart as each other and can figure it out at the same time, we need to get out of this. This is a bad investment. If that was going to work, it's not working. Now they're flooding freaking the market. Sell. Again, it makes you wonder. I mean, you got some prime real estate over here. This is prime. I mean, this is all over the water. But again, this is a tiny area. I wish I had like a little key or whatever that would tell me, this 1 inch equals 1 mile, But I know looking at this, and these are very high dollar, obviously, millions of dollar homes, 22 million, 29 million. These things, I'm telling you, are just sitting here rotting away. Companies thought they'd get in here, buy them out. I mean, where are all these people going? If these are people, you don't just sell a house and that many people are selling this. By looking at this, there was something so disturbing to me that I can't wait to see where this ends. Just like the glut of cars that are coming on the market, lease vehicles and whatnot, that are flooding the market and bringing the price of used cars and stuff down, this stuff is going to be bringing, aside from other reasons I've given you, this massive glut is going to be another reason that is going to be pushing housing prices down. If I was Mr. Big Shot Big Bucks, and I want a freaking house over here where I just showed you on that map, 29 million, 1 million, 3 million, 9 million, 10 million. Oh, here's a cheapie, 879K. Boy, oh boy, do I have a selection. I can find the best houses in that area and got a lot of wiggle room to play with the agents, the real estate agents. Listen, in case you didn't know, you're not the only one selling houses on this little isle the island of Le Gorse Country Club, Beach View Park, etc. area. There's a massive amount. Matter of fact, I don't know if anyone even lives here anymore. It's just a bunch of empty houses that are, mansions. So that price you're asking, listen, it needs to be really negotiable if you want me to buy it. Because if not, and by the way, I don't have a lot of time, I'm going right next door to your neighbor. And if they don't work with me, I'm going to the next neighbor and the one after that. And I can just walk from house to house because no one's here and they're all for sale. Somebody give me a reason. Give me the best reason you've got, if you can come up with one, why this many homes are for sale all over the damn place, at least in Florida. And in other places, there's a lot for sale. As you saw, maybe not as many blue ones, but a lot for sale. And give me a reason why that would be there, and there's just people living in them, and economy, everything's functioning as normal. This doesn't make sense to me. Not any way, not anyhow. And as soon as you go inland, start zooming in again, and there's houses everywhere. But an interesting thing, which let me pull you before I go. One more thing. This is much more inland, still that area generally speaking, but much more inland. So not the nicer houses. This is like normal stuff. And you don't see these little block areas, massive amounts of homes for sale. Having said that, though, when you go back to like where I live, in this general area, this is not expensive, place to live. This is Brandon, Riverview, etc., Lithia. There's a lot of freaking homes on here. And again, when you look at the foreclosure stuff, what this tells me, J-Snip for, you sit your butt tight. Sit down, be still, and just wait. You, son, you are going to have some deals of a lifetime coming your way in the quite near future. That's what this tells me. That is data that tells me, J-Snip, I'm on your side. Take care.